There are a couple of benefits of going down the sort of limited company route. One of the key ones for me was the tax benefit. Also, I think it just creates a certain mindset that your business is separate from your personal finance.
Hey guys, we recently published a really important video here on The Humble Penny, kind of just looking at a scenario where someone wanted to buy a buy-to-let property and also considering if they should buy their home first as a first-time buyer. That video absolutely took off, and we had a number of you guys in the comments below asking questions around like, what is this whole idea of buying buy-to-let through a limited company? How do you go about doing it? So for today's video, we're going to be exploring how to buy a buy-to-let property through a limited company. What are the pros of doing it? What are the cons of doing it? How exactly do you go about doing this if you wanted to explore this for yourself, okay? So to make today's video super practical, I just thought I'd reach out to some of my really good friends who are buy-to-let investors, and one in particular is an amazing friend of mine who has explored buy-to-let investing through a limited company. So I thought I'd interview him today so we can hear firsthand from a buy-to-let investor who's actually been through the whole process of trying to buy property via a limited company. Okay, so you guys are absolutely going to love today's video. If you're loving today's video already, I'd love for you to hit that like button just to give us a signal that you love the sort of videos we're making around this subject of property investing for you to potentially explore for yourself as an investor. Okay, so I'm now going to cut over and let's speak to my friend Cyprian, who is a property investor. So everyone, this is Cyprian. Cyprian, how you doing, man?
I'm doing good. Good to see you, Ken. Good to chat again.
Yeah. So just for some background, guys, I've known Cyprian like forever. Cyprian's one of my best friends in the world, and I've known this guy for pretty over 20 years now, Cyprian, right? I can't keep up with the maths on how long we've known each other for now.
Yeah.
So if there's anyone I go to for anything around investing, if I need someone to just brainstorm with, this is the person I'd reach out to. Okay, so I thought I'd bring him on board on the Humble Penny today. Cyp, do you want to just tell like our audience just a tiny bit about like who you are and what you do more generally?
Okay, I guess I'll try to keep things simple. I work in the financial services in the City of London, mainly focused on providing advice to companies, big companies, multinational companies. That's where I pretty much.
So let's just talk a bit about property, okay? But more specifically, let's talk about like property from the perspective of a limited company. So do you want to just start by telling our audience, like, what is a limited company?
Okay, that's actually a really good place to start in terms of what a limited company is. The way I see it personally, it's actually a structure, call it a legal structure, to really separate your personal finances from a business finance. And when you have that sort of legal structure in place, it then means you're pretty much protected. The liability, as they call it, is limited to that business entity, and it doesn't creep into your sort of personal finances and your personal life.
Interesting. Okay. And are there any tax benefits potentially, as far as you're aware, that people might benefit from doing it via a limited company compared to, say, doing it, you know, how normal people did it before, which is that you just bought a property and, you know, you bought a buy-to-let under your name and that was it?
Yes, definitely. And I think for me, I'll mostly speak personally in terms of my own experience. There are a couple of benefits of going down the sort of limited company route. One of the key ones for me was the tax benefit. Happy to elaborate on that. Also, I think it just creates a certain mindset that your business is separate from your personal finance.
Okay, that's amazing. So let's think about the people watching this for a second. We've got a broad spectrum of people, from first-time buyers to people who already have their own home that they're living, to people who are basic rate taxpayers, higher rates, additional rate taxpayers, and so on. And people who are thinking about buying, as I mentioned, for the very first time.
Yes.
In your opinion, in your kind of personal journey as an investor in property, who should consider buying property via a limited company?
Good question. I think, first instance, everyone should. Everyone should, but it then really depends on your personal circumstances. And maybe this then leads us to talk about some of the benefits of it.
Yeah.
We've touched on the tax benefit. There are certain tax benefits within a limited structure compared to a personal structure. A couple of other things as well. There is that sort of future planning in terms of a limited company. If you have a company, it's easy to transfer a company compared to transferring a single asset. So if you have the property in your name, you then have to go through this rigorous route. But if you have it in a company, the company actually owns it. So if you need to transfer it, you're transferring ownership of a company. So for me, those are the two things. A third one that's quite important as well. I talked about this legal structure, this separation. It also protects you personally because the liabilities are then limited to that company if anything does go wrong.
Interesting. Speaking to that point, you mentioned the word transfer. What does that actually mean? Is that do you mean if you're transferring it to your spouse or if you're selling it? What does that actually mean, that word?
So by transfer, again, if I take a step back, if I purchase a property in my name and say in 20 or 30 years' time, I want to give it to one of my kids, there is a sort of complex change of ownership that goes through actually owning that property in your name. The transfer I talk about is if it's in a company and you're a director of this company, you could just change the directorship of this company to somebody else. You could change your daughter, your son, your wife, whoever you want to change it to. Obviously, there are certain elements to that and you need to get the right advice, but that's just a simpler route in terms of transfer, as I've mentioned it.
You know how previously people used to buy properties under their own name and stuff, and people still do, by the way. And now some people are exploring buying via a limited company. Just based on your own experience, is it better to own a property in a limited company or under your own name?
I would say, as I mentioned earlier on, I would say the limited company approach works for several reasons. So we can spend a bit of time on the sort of reasons. So, for example, if I touched on the tax, the sort of tax paid within a company structure is a corporation tax, which I think at the moment is 19%. And if you're an individual, you also have to pay tax on the income from that property. And if you're a higher rate taxpayer at 40% or an additional rate taxpayer at 45%, you can clearly see the difference there. So it does benefit from a tax perspective. Also benefits quite neatly from a sort of expense perspective as well. If you have a company, the sort of interest on your borrowings or your mortgage, as they call it, is an expense in a business structure. But if you're an individual and you've actually purchased this buy-to-let in your name, the mortgage or that sort of interest, in most cases, is marked down as an expense. So you actually could end up paying tax on that.
I want to just ask a question around just first-time buyers. A lot of people watching our channel are still saving up to buy their first property. They're trying to get onto the property ladder. And some people might be already have their own property and trying to buy their first investment property. But speaking to the first-time buyer scenario, do you think a first-time buyer can easily get a buy-to-let property via a limited company, or do they usually have to actually own their own property first before they're actually able to do that?
They can get it through through a limited company, but that word easily, it's harder for them. There is a bit more challenge, and there's several ways to think about the challenge. The first of all is you're coming in as a business owner.
Yeah. So
someone's looking to lend money to you, and if there is experience of actually a previous purchase, it gives them a bit more comfort. That's one aspect to think about. Again, just secondly, because of the way the risk is from these lenders, there's actually, in my own experience, there's limited availability of mortgages for first-time buyers in the buy-to-let space.
Interesting.
You can immediately see how it does get expensive and the mortgage rate actually is higher from that standpoint. Possible? Yes. Easy?
No.
Probably not.
Okay, so basically it works in your favor really to own your own property first before you head out and try and buy a buy-to-let if you're a first-time buyer. is what it
That's
sounds
been
like.
my personal experience, and yes, that's probably an easier direction, I would say.
Okay, cool. Yeah, that makes sense actually, funny enough, because like based on the research, from what I've seen, from hearing from other people who are first-time buyers who are trying to get into the market, that seems to be the trend. Seems to be that the requirements are, it's just so much harder. They actually do require you
Yes.
to own your own place before you try and buy your first buy to let. But let's just talk admin for a second, because some people watching this are thinking, yeah, okay, Ken, okay, Cyprian, this sounds really good. But how do you set up a limited company for buy to let investing? Like, what, like, does it cost money? Do you do, is it free to set up? What admin do you go through? If you have to think about it from a step-by-step basis.
Unfortunately, there is a couple of bits you have to think about from an
I know
administrative.
that. I'm just kind of like just putting the basics out there. Let's see what comes back.
But again, it's like anything. If you get the structure right and you're determined, you'll just push through. I would say in terms of the steps, obviously the basic one, the easiest one is to think of a name for your company. It's quite exciting, right? Just coming up with a name for your business.
Yeah.
And then I guess the more important step is this business has to be registered with the company's house.
Yeah.
Usually an easy thing to do, usually quite, I would say not too expensive, where again, in terms of figures, anything up to £20 should really get you registered in company's house.
Mm-hmm.
You can do it yourself. But my own personal approach was actually to hire a third party that has more experience in doing these things.
Okay.
And for me, that cost, I think it was £50. So we're not talking about, hopefully we're not talking about large numbers here in actually setting up the company. It does take a couple of days for that bit to just come through and you have your company officially, incorporated with the company's house. The next thing you have to do is to then pretty much set up to pay corporation tax, because again, that's what the powers that be are interested in terms of when this company does make a profit, how does it pay its taxes?
Okay.
Again, that's pretty much a straightforward approach. That doesn't cost anything, it costs time. And I would say there are two more things to think about. The third, so I've talked about incorporating, I've talked about corporation tax. The third is to actually have a business account. So you need to have a dedicated business account. This is a limited company and this is a business. So again, you could do it with one of the high street banks or whoever works for you. And then I'll say finally, and this is probably where most of the cost will lie, is you will need to have an annual account done, basically on an annual basis. Some may want to do it themselves, but I just defer it to the experts, which basically means you need an accountant. Just oversee the movements of money, assets, liabilities on an annual basis. So those are the four key things I would say.
Okay, so it's interesting listening to you and I really want to call a spade. Like when people talk about investing in property, like we talk about it so casually, but the word you used quite a few times is the word business. This is a business. Like if you're doing it via a limited company, or even if you're doing it under your name and trying to invest in property and build up a portfolio, you're actually creating a property business, a property investing business. And so with that business comes risks and rewards and costs and things like that. So it's good that you're actually using those words to describe it. Do you want to just give us some color on how long that whole setup process might take? Just a very realistic time frame. They might take someone to go from idea and I've got some money to invest in buy-to-let to setting up all the admin of now saying I've got all my limited company set up. I'm now ready to start that process of trying to purchase my own property and stuff like that.
I would say it's quite quick. It doesn't, if I was to put a time frame on it, I'll say realistically, if you give yourself a month, and the reason I'm even saying a month is I'm thinking about the accountancy side of things. So if we take a step back in terms of incorporating the company, you could say anything from 1 to 2 weeks, really. The bank account, again, a similar time frame that could be turned around within a week. And then finding an accountant that works for you, a similar time frame. If you have the money, you have clarity of what you want to do. these businesses are well structured to support you. So I would say maybe give yourself a month to actually sort out that admin before you go to the next phase, which is probably the more exciting phase about the buy-to-let business.
Okay. So, and I know this sounds obvious, but how does someone actually buy a property through a limited company? So you've talked about like the admin of setting the thing up. So you set up a company. How do you end up to become the person who says, actually, I've now got a property that is owned by a limited company? It almost feels like what's the step after that?
Again, it's actually quite similar to buying it in your name. And maybe if I go on that journey and then come into doing it from a buy-to-let, maybe that would be helpful. Again, in terms of buying a property, you'll do the sort of basic homework around how much deposit you have, if you have good credit score, all of the basic things you need to do about your finances. Obviously, you have an idea of the area and how much you have to spend and those sorts of things. So that's, in a sense, that's what you're doing by setting up the company. The company just becomes an entity, an entity you're going to use or a thing you're going to use to make this purchase. The going on to property websites to look at the properties you like, the sort of analysis around the profit potential, excitement about the renovation and all of that still is the same. Once you are then happy with that sort of property or what you want to buy, the question then becomes, how do you get financing for that?
Yes, okay.
And there's something I have missed in terms of just jumping to that bit, which is how do you get your mortgage? So I'm happy to talk about that process.
That was going to be my next question to you, actually, because I know how, and I know it's not as straightforward getting a mortgage through a limited company. So do you want to just walk us through how does one actually get a mortgage with a limited company, and what's the process? What are they actually looking for when you try to get a mortgage?
What I would say is, in terms of actually getting the mortgage itself, a bank wants to lend you money to purchase a property. And at this point in time, they're actually lending money to a business. They're lending it to a limited company. And there are certain complexities. In my own experience, what I did was to get a mortgage broker to help me with the heavy lifting.
Okay.
Because it wasn't as straightforward as just going onto a website and filling details to have a sort of a property in my name. So you get the mortgage broker in place. The mortgage broker then exposes you to the lenders. And then the lenders are now doing their due diligence. But they're doing their due diligence twofold this time. They're doing it on the company and also doing it on the directors of the company.
Interesting. Okay.
So in a sense, the moment they start doing it on the directors of the company, in my case, I'm the director of my company, then reverts to the due diligence they would normally do if you're buying it in your name.
Okay. So two things. So you mentioned you got a mortgage broker, somebody to help, to assist. Where did you find someone like that?
Good question. Pretty much went online and just, for me, I did a lot of research around buy-to-let and this sort of journey and these conversations we're having. And the sort of direction and guidance being given was, this you probably want to get a mortgage broker to support you through. You can do it yourself, but I did a search online, just made sure I was comfortable, interviewed, had a conversation with the broker, and they've basically been, in my eyes, a business partner ever since.
And you know how you talked about it helps with some of the heavy lifting. Let's add a bit of color to that. Like, what kind of heavy lifting are we talking? Like, with a mortgage broker, like what advantage do you get with a mortgage broker that you would not have had if you had done it by yourself? Like, what do they have? What do they see that ordinary people might not see?
Good question, actually. I'll say, I guess, first and foremost, they have a clear understanding of who the buy-to-let mortgages for a limited company, who those providers are.
Right.
So they really cut out not all lenders will lend to a limited company for buy-to-let purpose.
Okay.
So they cut out quite a long list or host of lenders who may be the high street names, but are just not for this space.
Yeah.
So they cut those out, and then they give you clarity on who to then do business with, and certain requirements, certain constraints. Because I use the word risk and I use the word business because most lenders, and perhaps I'm jumping ahead slightly, most lenders are asking themselves, I'm lending money to a limited company, which means if there is a sort of bad outcome, I can't really, in most cases, go after the director. So I have to make sure I'm comfortable with the risk. And one of the checks they then do is, does the rental income coming from this business cover the mortgage significantly above a certain point? So these are some of the things, and these are some of the heavy lifting I'm talking about. Those sorts of analysis, extra requirement in terms of personal information, the checks on affordability. You almost just want to outsource that. And let them get on with it.
Okay. And just to check as well, can you just name some of the providers you've come across in this buy-to-let market who are able to lend on a limited company, to a limited company?
Again, I think the market keeps evolving, but when I went through the process, the two I had conversations with were Paragon Bank and
Paragon.
Bank. Yes.
Paragon and
Barclays.
Okay, got it. So let's because I know people love their summaries, right? So let's look at the pros and cons for buying a buy-to-let through a limited company. You've touched on some of it, but if we could almost walk through a process of saying, here are the pros, and then here are the cons. Can we just start with the pros, if you had to almost list them and say, here are the pros that you see from your experience of buying buy-to-let through a limited company?
Okay, I think with the pros, I would say maybe 3 or 4.
Okay.
So the first one we've talked about quite a bit is just the tax benefit. Again, it depends on your personal tax arrangement, but I think there is benefit from a tax perspective there. The second is also that ability to actually separate expense from the profit you make on this business. So that's quite important. The third for me is, as I mentioned at the start, which was one of the key drivers for me personally, was the fact that you had this business, you had a business mindset. The finances of the business was separate from your personal finance, from your family, from your kids, and that sort of stuff. That's quite important for me. And then just finally, I know we talked about this transformation. The actual future planning is quite important. For me, I enjoy and I look to actually spend more time with property investing. And at certain points, I don't think at the moment, I'm planning to sell those underlying properties. So it would be just neat from a business standpoint, from a limited company standpoint, to just change the ownership.
The word neat is such a city. You know, you're a city guy when you use the word neat.
Always looking for elegant solutions.
Always that elegant. Those words are, you're a city man when you use those words. So I just want to highlight, just almost for us to elaborate on one thing, because there's some assumed knowledge, because I want to make sure that our audience are completely in the loop here, because the point about tax, because part of the reasons why people are some people, particularly the higher rate taxpayers and additional rate taxpayers, are shifting towards a limited company is because of the changing rules around like just the deductibility of interest and stuff like that. Do you want to just speak to that very briefly? Just explain very layman's terms what that actually means, like, because now, as holding property under your name as a higher rate taxpayer, the way in which that mortgage interest was treated is no longer the same as it used to be many years ago. So do you want to just touch on that briefly for the person who's watching who knows nothing about this, who might just be very curious about how that whole thing works?
Maybe if I split it into 2 sections, and maybe if I use a simple example. So if I made a profit of, say, £5,000 in a given year on my property, if it's in a limited company, that £5,000 is then exposed to a corporation tax of 19%. That's it's simple. But in the sort of owning this property in my name, if I'm a 40% taxpayer, or high, as they call it, high rate taxpayer, then the profit is basically there'll be a 40% charge on that profit. So from that sort of example, you can see the difference in the tax structure there. That's the profit. But before you even get to the profit, you have to deduct your expenses, right? And within a limited company, your mortgage, your interest, the repayment back to your lender is an expense. It's a business expense. So for example, if you're paying a mortgage of £500 a month, which is interest only on your property, quickly in the company structure, you deduct that as an expense. So that what actually comes out is a simple profit from just the business mindset of how businesses work. But if this property is owned in your name, the interest or the mortgage interest isn't quite straightforward in the sense that you could actually deduct it as an expense. I think you have a sort of rebate of 20%, which is the sort of standard rate. Anything above that doesn't count as expense. So anything above that actually will be reflected in your profit, and you then have to pay 40%, 20%, 40%, or 45% on that. And these numbers I've quoted are basic rate, higher rate, and additional rate tax rate. I hope that helps.
Yeah, so that definitely helps. I mean, I know that a number of people will know what we're talking about, and some people this will be quite new to them. So I think that explanation was good. We're going to look for some more resources that might help people. I'll put that in the resource section. But let's talk about the concept. So you've talked about the pros, and I like to talk about cons because property investing is complex, and I think people need to just understand the risks that are tied to the rewards when it comes to property investing as well. So do you want to just speak to some cons based on your experience as an investor in buy-to-let through a limited company?
Yeah, again, I've experienced three, I would say, in terms of the sort of negatives or cons. The first is, we spent a bit of time talking about it, is just the admin, the administrative side of it. And there's also a cost embedded in that admin. So with the admin, we went through the process of setting up a company. That's even before you start thinking about the mortgage. So that in itself shows you there is complexity there. But on an annual basis, you then have to make payments to the accountant for services. You also, because you have a business bank account, there is, in most cases, and in my own experience, there are fees to be paid on a monthly basis. Not that major, but these are all expenses that may erode your profit. So I would say admin is one of the cons. The second one is there are certain tax benefits of actually being outside this structure, buying a property in your name. So every one of us has a capital gains tax exemption of, I think at the moment it's about £12,000, but we can check the actual number. But when you're buying property within a business, within a limited company, you really do not have that. You don't have that sort of exemption, so you've forgone that. So I guess admin and capital gains. And then the third one I thought about, escapes me now, but actually is quite important, is the mortgage rate. So we've talked about buying properties. The actual lender rate or the mortgage rate you pay when it's within a limited company is higher. The lender will give you if you actually purchasing the property in your name.
Interesting. So when you say higher, let's understand. Give me an example of a rate from a buy-to-let bought in a limited company. What kind of rates are we talking here?
I would say if you're looking for a mortgage where you're going to fix the sort of agreement with you and the lender for the next 5 years, you could see a rate of 3.5% as a mortgage rate. And obviously, as you know, with mortgages, there are other things to consider. So assuming a like for like, where you've put a 25% deposit, if you have that, and you have a fixed term mortgage for 5-year period, 3.5%.
Okay.
If you try to do something similar in your name, you could perhaps be getting 1.5%. So you could easily see a 2% differential in the lending cost.
Wow. 2% is quite materially different. But I guess somebody has to then compare that to like the benefits you're getting by having it in a limited company structure from a tax perspective and things like that. And obviously how that works out from over the medium to long term.
Yes.
So that it does actually, somebody does have to do that comparison when they're having to think about that. Just thinking about that, speaking of benefits from a limited company perspective, let's say you've bought your property, it's in a limited company, you're starting to receive your rent, you're starting to account for expenses and so on, and you're starting to make profits because this is a business. How do you withdraw the profits from your property business in a limited company?
That's an interesting question, I guess. And I think the simple answer is you take money out as dividends, just like you do with every company. I think I've kept myself in terms of the words I use to continue to hammer this home about this being a business. So if there are profits to be made within the limited company, that can be taken out as dividend. And then again, this is where you definitely need tax advice, I would say, because as we know today, if you go online, and I'm sure you can provide the resource, from my perspective, and again, this is out there, the sort of first £2,000 of dividend is tax-free. But anything above that, you have to pay tax on. Yep. So you then have to pay tax, which is actually linked to your income tax.
Yeah. Mm-hmm.
So this is where you then take a step back and say, I have this business and I'm looking to take some profit out of it. Mm-hmm. What's the most efficient way to do it? Do I just take out the tax-free dividend, or do I continue to reinvest within the business? So that's sort of a personal decision.
Okay. So really good point, actually. We've made a video, and it's a good time to introduce this, on how to pay yourself as a limited company director. I'll link to that video below and above for you guys to head over and check that video out. And it's also worth mentioning that there are rule changes coming in, I believe this April, around increases in dividend rates. Dividend rates are going up by 1.25% effective April this year. So that basic rate of about 7.5% rather, yeah, that limited company directors have enjoyed for some time will be increasing by 1.25%. And the same on the other end for higher rate as well. Just worth mentioning that, because I know this is something that's on the horizon. So imagine a first-time buyers watching this now, and they're thinking to themselves, right, I'm going to go and buy myself a buy-to-let in a limited company. I know it's tough. I know I'm going to struggle, but I'm going to have a go, Sip. I'm going to have a go. I'm going to try and buy one. If they buy a property in a limited company, do they still remain a first-time buyer for the purpose of buying their own home? Do you know?
I don't think they do. I think they've purchased a property. So regardless of the entity, be it in your name or be it in a limited company, you purchased your first property.
Right.
And when you, as we know in terms of the expenses, when you then purchase your second property, there are some costs to that.
Yeah, so there's the additional stamp duty of 3% you have to think about. Yeah. It's funny you say that, because I actually thought that technically you'd still be seen as a first-time buyer, because the limited company is a company, but you are the director of that company. And I don't think there's no way they'd set this up to allow that to happen. And I might be wrong. So this is where I will engage on the wisdom of our audience and ask our audience, For those of you who definitively know the answer, can you guys let us know in the comments, provided you know the answer based on experience? Please jump in the comments and let us know. Our feeling is that no, you're not still able to have your first-time buyer privileges if you've bought through a limited company. But we may be wrong. We may be wrong.
Yeah, we may be, but it's like
we may be wrong.
Yeah.
So this is where we're going to rely on your wisdom, guys. So definitely jump in the comments and let us know. And Sip, my final question, just to wrap this up. This has been a really, really, really insightful chat. My final question is, a few years into your property investing journey, what do you wish you knew when you started investing in property? Given the wisdom, I can see you've even got the beard to prove it. You've had the experience of it.
Yeah, I guess that gives me an opportunity to reflect on the journey.
Yeah.
I would say, given the topic the conversations we've been having, I almost separate it into two bits. The first being the actual having the property, having this asset within a limited company. I think because I did the research, I went online, I listened to videos like this, I found it really helpful. And I believe I've set it up properly. I haven't had any sort of regret in terms of having it in a buy-to-let. On the other hand, owning a property is an interesting journey. So I think there has been ups and downs in terms of the actual property investing itself, but ultimately it's something I'm passionate about. And over the long term, I think for me, it works out because of the passion in it. And so, yeah, it's been an interesting journey, but it's been an exciting.
And you continue to be a buy-to-let investor, hoping to grow your portfolio. And
of course.
In the many years to come. Sip, this has been amazing. Thank you so much for just showing up and really just delivering so much value to everybody here at the Humble Penny. If people just wanted to connect with you, say hi and that sort of stuff, can they connect on, where can people reach out to you? LinkedIn, or let us know.
Oh, good question. Well, LinkedIn, I guess it's Cyprian Njama, Njamma. So you can reach me on LinkedIn. That's probably the easiest place to go get me.
Awesome. Guys, if you really enjoyed this particular episode, I'd love for you to make sure you hit that subscribe button, give us a signal, and hit the notifications bell to watch out for more videos like this, kind of just really unpacking this different aspect to investing, whilst also being super practical about the realities of investing your money through an asset class like property. If you'd love to know a lot more about property investing, how do you actually implement the strategies, whether it's HMO investing, buy to let, rent to rent, all that sort of stuff, I'd refer you to our sister brand at Financial Joy Academy, where you can head over and learn some more. I'll link to that below as well as above. Thank you so much for watching today's video, guys. And as ever, in all things, be thankful and seek joy. Take care, people. Bye, Sip.
Bye. Bye, guys.
Bye.